stocks to buy with high growth potential. The US is at the beginning of a strong macroeconomic recovery, which should shortly be reflected in corporate revenues and earnings. Businesses are increasingly reverting back to contact-intensive activities, made possible by substantial progress on the COVID-19 vaccination front. On March 10th, House Democrats passed a $1.9 trillion pandemic rescue package that is expected to give a huge boost to consumer spending. Furthermore, rising bond yields have raised investors' confidence of a strong U.S. economic comeback. Economic recoveries usually benefit small-cap stocks because they are more sensitive to consumer spending. A reflection of the gradual economic recovery's effect on small-cap stocks is evident in iShares Russell 2000 ETF's, IWM, 46.9% gain over the past 6 months. Also, small-cap stocks generally perform well with rising inflation due to a rise in aggregate demand it implies. The annual inflation rate in the US increased to 1.7% in February, up from 1.4% in January. This represents its highest rate since February of 2020. Against this backdrop, we think it would be wise to bet on small-cap companies Blue Knight Energy Partners, LP, BKEP, Ocean Biochem, Inc., OBCI, and Live Ventures Incorporated, Live, which possess solid growth attributes. Blue Knight Energy Partners, LP, BKEP. With a market capitalization of $130.63 million, BKEP is a master limited partnership, MLP, company that owns an independent asphalt terminaling network in the U.S. The company provides integrated terminaling solutions for infrastructure and transportation end markets. Earlier this month, BKEP closed the sale of its crude oil terminaling segment to Enbridge, Inc. ENB, for $132 million. This should help its transformation to a pure-play infrastructure terminaling business with greater financial flexibility, thereby reducing the volatility and risk profile of its business, affording it a sharper strategic focus. BKEP's total revenues have increased 9.6% year-over-year to $29.81 million in the fourth quarter, ended December 31st. Its operating income has risen 11.4% from its year-ago value to $9.46 million, while its EPS has improved 93.9% over the same period. BKEP's EBIT has grown 21.3% over the past 3 years. The company's impressive track record positions it well to emerge as a leading player in the terminaling business. Analyst expects BKEP's EPS to grow 4% over the next 5 years. The stock has gained 58.3% year to date. BKEP's strong fundamentals are reflected in its ratings. The stock has an overall rating of B, which equates to buy in our proprietary rating system. The ratings are calculated by considering 118 different factors, with each factor weighted to an optimal degree. BKEP has a B grade of B for quality, momentum, and growth, and an A for value. Within the B-rated MLP's other industry, it is ranked number 4 of 12 stocks. Ocean Biochem, Inc. OBCI. OBCI manufactures, markets, and distributes a broad line of appearance and maintenance products for the marine, automotive, power sports, recreational vehicle, and outdoor power equipment markets. The company also produces private label formulations of many of its products for various customers and provides custom blending and packaging services for these and other products. Last month, OBCI announced that its subsidiary Kinpac Inc. plans to expand its manufacturing and distribution facilities in Montgomery, Alabama. With both the boating and RV markets taking off, the $5 million expansion plan is expected to be a critical factor in supporting the company's anticipated business growth in the future. OBCI reported record fourth quarter net sales for the 5th consecutive year. Its fourth quarter 2020 sales growth was driven primarily by demand in the chlorine dioxide product group of disinfectants and sanitizers, as well as private labeled products. In addition, the company had a significant increase in its core product groups and its winterizing products and antifreeze sales. Its net sales grew 33% year-over-year to $12.90 million in the quarter, ended December 31, 2020. OBCI has gained 223.4% over the past 3 years due to its impressive earnings and revenue growth. The company's revenue has increased 11.6% over the past 3 years, while its EPS rose 48.9% over that period. The stock has gained 21.2% over the past month. It is no surprise that OBCI has an overall B rating, which translates to buy in our rating system. OBCI has a B grade for sentiment and value, and an A for growth. It is ranked number 3 of 67 stocks in the consumer goods industry. Live Ventures Incorporated, Live. Live is a diversified holding company with several wholly owned subsidiaries and a strategic focus on acquiring companies. Through its subsidiaries, the company is engaged in the flooring manufacturing, steel manufacturing, and household appliances and entertainment retail businesses. In January 21st, Live, its subsidiary, Vintage Stock, fully repaid its $24 million term loan debt to Comvest Credit Partners. The repayment will help the company to reduce its interest costs and place it in a stronger position to deploy cash to other initiatives, such as new acquisitions. LIVE's total revenues have increased 49% year-over-year to $62.50 million in its fiscal first quarter, ended December 31st. Its operating income has risen 109% from its year-ago value to $7.30 million, while its EPS has improved 1,050% to $3.45 over the same period. LIVE's revenues have increased 9.8% over the past 3 years, while its total assets rose 3% over that period, underscoring the company's impressive growth potential. The stock has gained 98.2% year-to-date. LIVE's ratings reflect this promising outlook. The stock has an overall A rating, which translates to a strong buy in our rating system. Live has an A grade for both value and growth. It is currently ranked number 3 of 51 stocks in the A-rated outsourcing, business services industry. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire, and we'll see you in the next one.